Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold.
ICE Brent crude oil futures. A higher but indecisive spinning top pattern yesterday as prices tried up to the overhead congestion between 73.38 to 73.73, consisting of the May 2019 high at 73.38 and the important 50% absolute Fibonacci line at 73.73. Above this is the flatlining mauve medium moving average, currently at 74.28, and then the big picture item of the overhead dark blue upper time, currently 74.79, of the showrunner for this market since last summer, the broken, now repaired April to July 2024 bearish shift pitchfork. This upper time is also melded in since late February with the declining short medium moving average, which is currently at 74.85. Meanwhile, below we have another congestion zone between 71.29 to 72.28. Let's say 72.29, consisting of highs and lows from 2019, 2020 and 2023. Now, I will continue to point out that in the even bigger picture, the action since early September last year to date, including the head and shoulders continuation pattern last year, a bright red neckline currently at 74.96, remember that level, and the peak in January can all be seen as a possible, if lopsided, bearish cat's ears pattern. This would be a significant bearish pattern and it would give a target X1 down in the 64 even zone. Personally, I had thought this might be a bit of a stretch, but until last week or so, this still showed up as a possibility. Finally, I'm also cognizant that the action since the start of March may be building up to a bear flag pattern, though this is becoming less certain each day as prices try higher. Now, so far today, a higher open and a tentative test up into the 73.38 to 73.73 congestion area overhead, but very tentatively, and we are still within yesterday's range, well, almost, just now. Spot gold. A reactionary small bullish piercing line pattern and bullish double yesterday after the previous session's second bearish black crow. This was the end of the small pullback from making a new all-time high last week. We have some roundophobia support below from the 3000 level, and we also still have overhead the dark blue middle time, currently at 30.46 of the early January to late February bullish Andrews pitchfork, which has shown the bullish angle of attack of this market since late February, as well as the 100% projected Fibonacci line at 30.44. Now, further down, under 3000, we seemingly have little until the 29.55 zone, bar the rising dark blue lower time, currently at 29.68. As I've said throughout last week and now into this week, when looking at the recent action, I saw a pattern here, an early January to date bullish halfway hesitation, with potential up as far as target X in the 31.50 area. Nothing so far has altered that view. And so far today, not much. Either side of yesterday's close and within yesterday's range right now and looking like an indecisive doji cross.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.